This is an analysis from Alpha Business Media. When you look at Nepal's mobile payment market, it's not just competitive. It's a full-on battlefield. You've got dozens of players all fighting for the same piece of the pie. So what really separates a fleeting contender from a true enduring champion?
Well, I can tell you, it's not about who can throw the most cash at discounts. It's much deeper than that. It's about a really sophisticated strategy, one that's rooted in a deep, deep understanding of Nepal's unique economic and cultural fabric. So let's dive in and break down what that winning strategy actually looks like.
Okay, here's our roadmap for this analysis. First, we're going to get a handle on the battlefield itself. Then, we'll uncover the 3 big secrets to success. After that, we'll look at what's on the horizon, and we'll wrap up by outlining the path forward for everyone in this space.
Right, first things first. To win any battle, you have to understand the terrain. And Nepal's digital payment landscape? Well, it's a real paradox. On one hand, you have this immense potential, but on the other hand, just brutal, cutthroat competition. And make no mistake, the fundamentals here are incredibly strong. We're talking mobile penetration that's over 130%. Think about that. You've got a young, tech-savvy population and a government that's actively pushing for digitalization. It's basically a perfect storm for FinTech growth. The potential is just massive.
But the reality on the ground is a whole different story. It's what we call a red ocean strategy. It's just a relentless war, fought with endless discounts and cashback offers. And look, this model is just not sustainable. All it does is burn through cash and create a user base with zero loyalty. I mean, they're ready to jump ship the second a better offer comes along.
So, the big question is, how do you escape this trap? Well, the first secret is this. You have to stop buying users and start earning their loyalty. And that means a huge shift in focus, away from just simple transactions and towards creating what we call a hyper-localized ecosystem.
This is how you build an impenetrable moat around your business. See, the winning app isn't just another wallet. It's basically the remote control for a user's entire financial life. Think about it. When you can pay your electricity bill, your kids' school fees, even your government taxes all in one place, that service stops being a convenience and becomes an absolute necessity. The pain of switching to a competitor, it just becomes way too high.
All right, the second secret might be the most counterintuitive one, especially in our digital-first world. It's all about the most valuable currency in a market like Nepal, and that currency is trust. A purely digital approach just won't cut it. To succeed, you have to master what's called the phygital imperative.
So what is phygital? It's exactly what it sounds like. A fusion of physical and digital. It's a hybrid strategy. It's about recognizing that in a country where digital literacy can be all over the place and cash is still king, you absolutely need that human touch to build real confidence and trust.
And this physical agent network? It does 3 critical things. First, it's the bridge that lets cash move into the digital economy. Second, it's your front line for educating customers and providing support. And most importantly, it gives your digital service a real, tangible local presence. That's what builds that deep, profound trust. This network isn't just an add-on. It is the fundamental infrastructure of the whole business.
And that brings us to our final secret. This one is all about how you navigate the existing financial landscape. Because, let's be real, no fintech operates in a vacuum. If you try to just disrupt the big legacy institutions head-on, it is a recipe for failure. The real art here is in symbiosis.
And you can really see the 2 different paths here. The antagonistic, failed approach sees banks as old competitors you need to crush. But the successful symbiotic approach, it sees them as essential partners. Partners for infrastructure, for liquidity, for credibility. You don't just react to regulation when it happens, you proactively engage with policymakers to help shape a stable, innovative environment. The key takeaway? You don't replace the system, you augment it.
Okay, so once you have this foundation in place, how does it set you up for the future? Well, mastering these 3 secrets is precisely the key that unlocks the next wave of major growth opportunities. And the unseen engine that's going to drive all that future profit is data. Let's be clear, the razor-thin margins on payments aren't the real prize here. They are the means to an end. That end is capturing rich transactional data. That data is the fuel for much higher value services, things like personalized offers, business intelligence for merchants, and of course, the incredibly lucrative world of digital credit.
It's this combination of data and trust that unlocks what is truly the holy grail for any mobile wallet in Nepal, remittances. If you can become the default endpoint for the country's massive inward remittance flows, wow, that would be a monumental catalyst. You're talking about instantly injecting huge amounts of liquidity into the digital ecosystem and expanding your user base overnight.
And even beyond remittances, the ultimate test of true national scale is cracking the rural market. And this isn't about just copy-pasting what works in the cities. No, it means creating customized use cases specifically for the agricultural economy. Think about digitizing payments for farming co-ops, for seeds, for fertilizers. If you can do that, you unlock a market that is far, far larger than just the Kathmandu Valley.
So what does all of this mean for the key players who are actually shaping Nepal's fintech future? Well, it means the path forward requires real strategic depth, not just superficial growth.
So, if you're an entrepreneur, the message is pretty clear. Don't try to be everything to everyone right away. Solve a niche problem really well first, then build out from there. Make sure that phygital agent strategy is part of your plan from day one. And please, view the banks as your allies, not your enemies.
Now for investors, it's really time to look past the vanity metrics. Forget just registered users. Dig into the activity rates. Analyze the strength of that agent network. Assess how savvy the management team is when it comes to regulation. You want to invest in companies that are building durable moats of utility and trust, not these temporary castles built on cashback.
And finally, for the policymakers, the goal here is to keep being a catalyst for positive change. Push hard for full market interoperability, like a unified QR system. Provide a clear, predictable regulatory roadmap so people feel confident making long-term investments. And always, always balance that drive for innovation with a strong focus on protecting the consumer.
So, this whole analysis brings us to one final, really crucial question. In a world that's obsessed with fast-moving tech, we've seen that success in this market is actually built on ecosystems, on human networks, and on partnerships. It almost seems like the most important asset isn't the technology at all. It makes you wonder, in fintech, is trust really the ultimate currency?